Well, welcome all. It is my pleasure to have you take this lecture. I'm looking forward to your impressions and your discussion. Um, I'm Ricardo Hausmann, and let me share my screen before I do anything else, and let me let me get here. So I've titled this lecture "In the Fog of War: Reflections from the COVID-19 Frontlines." And the reason why I've called it this way is quite obvious that the Growth Lab that I have the privilege to direct, it's a group of about 50 people at the Kennedy School. We do academic research on economic growth, on technology adoption and diffusion, on economic complexity and growth diagnostics, and so on. We also do applied research on identifying and removing the constraints that countries face that limit their growth potential. But since the start of COVID-19, we have, decided that there's no more important issue to think about than this one at the current time. So we've started to contact all the countries we've been doing work with and that we know and that know us. And to date, that means that we've had very, very senior conversations with the governments of Honduras, El Salvador, Panama, Ecuador, Peru, Albania, Saudi Arabia, Ethiopia, Namibia, and South Africa. So, and we keep in very, very intense contact with most of them. And we are doing, applied research to try to see what, the problems they're facing and the challenges they have. And we learn a ton because each country is so different, each context is so different. So it allows us, we know what each one is thinking and what they're doing. So it's been a very privileged position to be in. And I want to share with you in this talk some of the issues that we're thinking about right now and the things that we think require more thinking, or at least, that's how I feel. The COVID-19 shock is a really massive thing because it's obviously an epidemiological shock that causes disease and death and so on. But it also has direct economic effects, which are large. To begin with, if you know that if you leave your home, you might get sick and get seriously sick and potentially die, then people are less willing to leave their homes. But in addition, many firms and governments have imposed distancing requirements or lockdowns, and those are going to restrict economic activity. But since everybody's doing that, that has aggregate implications for the world economy as a whole, and it translates into lower commodity prices, lower export demand, and essentially almost shutdown of tourism, a major decline in remittances. We have countries that rely significant on remittance flows, and a sudden stop in capital flows, where capital markets for emerging markets and developing countries have dried up, interest rates have backed up, access to funding is restricted, precisely at a time where you would want to maybe use more financing to cushion the blow. In most countries, even if they were immune to the COVID-19 shock, or if there was no COVID-19 within their territory, these indirect shocks would still be probably the largest single macroeconomic shock that these countries have seen since World War II. I don't know about before World War II because we probably don't have very good statistics, but so I think that this is potentially more severe than the 1982 Latin American debt crisis, or definitely I think the 2008-2009 global financial crisis is going to be small potatoes. compared to this one, and so on. Now, this is all made that much more complicated by the fact that we have huge gaps in knowledge and information. There are many things that we know that we don't know. There are probably many things that we don't know. And somebody said there's some things that we think we know that are wrong. But at least there are many things that we know that we don't know. And they loom very large in creating an environment of uncertainty in the process of decision making. So I'm going to cover three topics. The first, the epidemiological topic. You might say, what the hell is an economist doing talking about epidemiology? Well, because unless we get our minds around what we think about the epidemiology, we cannot think about the economy. And in the process, since everybody is so uncertain about what to do, then the best thing we can do is think through what the epidemiologists are saying and what makes sense to us, and how can we somehow incorporate our thinking about the epidemiology and color it with some economic thinking. The second topic I want to discuss is the creation of policy space. Countries cannot face this situation unless they have the capacity, the financial muscle to be useful. So the creation of policy space, and finally, the use of policy space, whether it's to strengthen healthcare, to help people, help firms, or help banks. So those are the topics I wanted to address. Let me make a very, very small review of epidemiological things and the applications we've been doing for the countries we're working with, and what they mean, and how they have radically changed at least my thinking on this topic over the last week. So this is real time. So over the last week, I'm not talking about since I over the last week. Okay, so this is my and my thinking might change in the next week, but at least I'll give you my thinking this week. So essentially you have these, what they call SIR models, where there's a population that is susceptible. Some of them get infected. The infected infect other people. There's a fundamental parameter there, which is how many other people are infected by each infected person. It's a parameter they called R, or R0. And then the infected, some of them unfortunately die. The majority, hopefully, and thank God, recover, but then they become immune to the disease. So supposedly, that's our understanding, that they become immune to the disease. There's some discussion about it. So what ends up happening is that we tend to have these graphs where everybody, the population starts with everybody being susceptible because the coronavirus did not exist and nobody has immunity. So then as somebody gets infected, you start seeing this red line of infections. So that's the number of people that are infected at a certain point in time. And as these people get infected and then they recover, you start getting the blue line. And the blue line starts moving up as the integral under the red line. Okay, so that's more or less how these curves work, right? And the idea that everybody has been talking about, which I'm now, this is where I took this to be the obvious best possible solution. I no longer think this, but the idea was that without policies, you would get a huge peak of infections that will overwhelm the healthcare system. The dashed or horizontal line is the healthcare system capacity. And if people don't have access to the healthcare system, then they're more likely to die if they need assistance. And so the idea would be to somehow flatten the pandemic curve so that you get into the blue line. And the blue line has a smaller peak so that at any point in time, there are fewer people who are infected, but it has a peak that is further into the future. So you're also lengthened the emergency period to a longer emergency period. So for example, just to give you some concrete numbers, these are the number of cases in Spain in the logarithmic scale. Now I put Spain because Spain has been under lockdown for more than 3 weeks, and still in logarithmic scale, you have very significant rates of growth of the total number of cases per day. Something like 7% a day, which is infinity. These are the number of daily cases. There are about 6,000 new cases per day. Still in a country in lockdown for weeks, you're still having very, very high rates of infection. And these are the number of deaths, and that means that they have been averaging over 700 deaths a day. And you see that the number of infections it's not growing exponentially, but it's still growing even though the country's in lockdown. You would have imagined, well, if I lock the country up, as say India has announced, in 3 weeks, and we're done. No, in 3 weeks, there's enough contagion during these lockdowns for the process to keep relatively high. And we're going to estimate how high in a couple of the countries we're working on. And that gives you an idea of how tough this disease is. And this disease is particularly tough because it has a relatively short, latent, uninfectious period after you get infected. But then it has a very long incubation period in which you are infected. And probably, this is what everybody thinks, you're also infectious in this period. So you don't have symptoms, you don't know anything, you're infected, you're spreading it, you don't know about it. And then after 5 or 6 days, you start feeling symptoms. And then you probably, will stop seeing other people because you will, self-isolate, or you feel too bad to be doing too many things. And so maybe if you continue feeling bad, eventually you're going to seek hospitalization. So Andres Gomez Liavano, who's one of our research fellows at the Growth Lab, has been he's a physicist and an applied mathematician. He's been trying to estimate these models, estimate these parameters from real data of the countries we're working on. And just to show you that this is hot off the press, these are the data for one of the countries in our group. The blue line was the rate of growth of the disease. If you want, these are real data, the circles are real data, when the country was not in lockdown. And the red line is when the country is in lockdown. And we use that to estimate the model to estimate this parameter R0. And R0 is, if R0 is greater than 1, you get exponential growth, right? And you're going to see that curve and so on. So with the country in lockdown, we estimate an R0 of about 1.7. But in the country before lockdown, the blue line implies an R0 of 2.7. So what does that mean? And just to show you how hot off the press is that this is a bilingual table. It's a good mix of English and Spanish. But with a parameter of 1.7, you get at the peak that 10.4 of the population is sick at the same time. Okay, so if you're talking about a country of 30 million people, you have 3 million people who are sick at the same time. And if say you lift the lockdown and you go back to the situation ex ante, where there were already some restrictions, but not a lockdown, you get to an R0 of 2.7, then you will have a peak when at the peak, you have a quarter of the population is sick at the same time. So obviously this overwhelms any healthcare system, no matter how much investment you do from here to there. And not only that, but if you look at the area under the curve from the beginning to the end of the disease, then you'll have essentially everybody gets a disease. 84% in one case, 92% in the other case. This thing that they called herd immunity. The R0 is allows you to easily calculate how many people need to get sick before the disease starts coming down. So just back of the envelope calculation says R is 2. Then in order for the disease to start coming down, it means that you need at least 50% of the people to have developed immunity. So that is 50% of the people would have to have had the disease before the stuff starts coming down. So that means an enormous amount of people need to get the disease before it starts getting any better. But by the time it disappears, everybody sort of like between 84 and 92% of the people got the disease. And if you think that, 1% of the people die, there's a hell of a lot of death, okay? Because it's 1% of the total population. And that's maybe in an optimistic scenario. We heard also from another country that we are working on that they've installed many ICUs. And to date, the death rate of people who have gone into an ICU is 100%. Is 100%. So just it's not a mechanical thing that if you get ICUs and ventilators, people survive. No, that has not been their experience to date. So for another country, we did these simulations. In many countries, they got into this process by thinking, I do a lockdown, it's going to hurt. In this case, we're simulating a 2-month lockdown. It's going to hurt, but after those 2 months, we're home free. So then we can focus on recovering the economy. So the blue line is what would happen in this country with the data estimated with the recent trends. What would happen in this country if they hadn't intervened? Now the orange one is what happens if you do a 2-month lockdown and then you reopen the economy. And the green line is what happens if you do a 2-month lockdown followed by significant mitigation. Okay? And the numbers you get is that, in this country, which has a population of about 30 million, you get, at the peak of the infection, you get 6 million people sick if you don't act. But if you do the 2-month lockdown, you get more or less the same number of people sick, about 6 million people at the peak at the same time, only that peak is no longer on July 29th, but it's on October 2nd. Okay, so essentially you delayed the peak by a little bit over the 2 months of the lockdown. Now, if you do substantial mitigation, you get a much smaller peak, but maybe you get fewer deaths, and then the peak might be in January. So the idea that you can, do 2 months mitigate, countries and presidents were very quick to impose lockdowns because every other president was imposing lockdowns and they would feel bad if they didn't impose lockdowns. But now they're in the middle of the lockdown and well, I'm going to tell you what they're doing in a while, but let me just show you another simulation before I go there. So we've been very interested by an idea put forward by Professor Baruch Barzel, who's also a physicist from the University of Bar Ilan in Israel. And he's a co-author of mine, which is Laszlo Barabasi, who's this network scientist. So we have 1 degree of We have 4 questions. No, let me see if anyway, you can't see the chats. So his idea is maybe well, maybe let me tell you before, and I'll come here back. So what are countries doing? Countries have now been adopting lockdowns. Of the 10 countries that we're working with, 9 are under lockdown. Actually, 8 are under lockdown. 9 have implemented lockdowns. 1 is opening up. Okay. Once you adopt the lockdown, all the attention span goes into the management of the lockdown, because there's so many issues that you need to decide. Who's authorized to leave the house? At what times? What are critical services? What kind of coaxing or enforcement do you put? How do you protect the families during the lockdown? If people don't have any money, they won't obey. So how much money can you give them? How quickly can you give them the money? How do you treat firms so that they don't fire everybody? And how do you protect people if they were fired? And how do you secure the funds to pay for all this? So that's why I called it the fog of war. So you adopted the lockdown, and now you're managing this lockdown, okay? But governments have yet to formulate a strategy of what happens when they lift the lockdown. So they're saying, let's manage this lockdown. Maybe we have to extend it, etc. But after some point, we will be able to lift the lockdown. Well, but I just showed you what happens if you lift the lockdown. You're still going to get a peak afterwards. Okay, so how do you lift the lockdown? One of the countries we're working on has already lifted the lockdown because they were one of the first ones to impose it. But now they're getting back to very hefty exponential growth, even though they have very significant mitigation measures. Okay, so we're thinking of ways in which countries should be thinking about lifting the lockdown. And here I'll present this idea by Professor Baruch Barzel, which I think is very interesting. The idea is to split the households into 2 groups, call them the evens and the odds. The evens are locked down this week and they come out next week, and the odds come out this week and they're locked down next week. It seems like a simple, stupid idea that half of the people are out at the same time. But the idea is that this interacts with the nature of the contagion, because as you saw in my previous description of the disease, if you get infected, there's a while before you become you have a sufficient virus load that you start infecting other people. But by then, you're probably back home, locked in. And you're home in a week, and in a week, if you got infected while you were out, in a week, your symptoms should appear. And if your symptoms appear, you're not going to come out. So the only people who come out are the people who are less likely than average, say, to be infected. So you're locking people down when they're most likely to be infected, which is when they're infected but without symptoms. And so for this reason, this cuts the R by more than half, potentially below 1. And Andrés Gómez Liébano has implemented the model of Professor Barzel, and we've been toying around with including a parameter that is how many people cheat, and how robust is this to cheating, and so on. So these are simulations, and by the way, this is let me explain what this is though. The green line is what happens if you don't do anything. The blue line is what happens if you impose a lockdown as inefficient as the lockdowns that we have seen. So you get less of a quick infection, then you lift it, and then you get the blue curve. And the red curve is what happens if you implement these alternating lockdowns. And this graph really made me think hard, and this is probably the graph that caused my thinking to change, okay? And this graph says, when you have these alternating lockdowns, because you have an R factor that is sufficiently low, the infection doesn't spread. And because the infection doesn't spread, people don't become immune. And because people don't become immune, then when you lift the lockdown, they'll get sick and you'll get back to exponential growth. So to me, you either accept that the only thing you can do is to flatten the curve and have everybody get sick and lose something like 1% of your population. And that's one way to do it. And the other one is to maintain these lockdowns sufficiently tough and sufficiently smart to last until you get to the vaccine. And once you get to the vaccine, you're going to make your population immune, not because they get sick, but because they get vaccinated. So that's why I put here as the trade-off being to flatten the curve or to wait for the vaccine. And that is a very important, I think, strategic decision that countries are facing right now. Should they adopt policies that just flatten the curve and hope for herd immunity? And that means that 90% of the people get sick and however many die. Or do they adopt a long restrictive process with maybe these alternating lockdowns plus other measures and postpone and postpone and postpone until they can get the vaccine? Now, we don't know, we know of several vaccines that are on trial. We know of several attempts to accelerate the speed at which vaccines are tested. There was an article, I think, in Nature discussing about the bioethics of asking people to randomly be exposed to either a vaccine or a placebo, and then to be exposed to the virus to see if the ones that got the vaccine don't get sick and the ones that did get the, you get it, just a randomized controlled trial, but where people sort of like volunteer to be infected with the disease, which is, which creates all sorts of ethical issues, but that would speed up the approval process. So that's being discussed, okay? But I'm just saying I'm no expert in this, I'm a dilettante in this, but I think that what I learned from these simulations is that we face the trade-off of making this a long, protracted process where we'll try to learn how to really constrain the disease, maybe with these alternating lockdowns complemented by other measures, or we're going to just flatten the curve, but most of us will get sick. Okay, so that's what I wanted to say on the epidemiological side. Let me talk now about the public policy space problem. Okay, the first thing I want to say is that countries are being hit by these very large shocks to exports, to remittances, to tourism. This would have produced a recession even if there was no COVID-19 in the country, as I said before. In addition, they're lowering output because they're fighting COVID-19 with lockdowns and so on. And all of this translates into much lower taxes because there's less economic activity, consequently lower taxes. But at the same time, they wish they could spend more money. So lower taxes and wanting to spend more money to help people through the crisis means that they need to borrow more, but they need to borrow more just at the time when capital markets are shutting down. Okay, so that's being between a rock and a hard place. So let's continue. What's the policy space problem, if you want. So governments, they want to run large deficits, and all economists are saying, you know, don't be orthodox, this is a moment of crisis, throw away the rule book and so on, be generous, be, you know, forceful, abandon fiscal responsibility rules, which I think they should be abandoned. But they also want the private sector to run large deficits. They want firms to keep their workers, not to fire them, and to borrow money to be able to pay them and keep their workers and run a period of negative cash flows until the economy recovers and try to survive. And they want households to maybe use their savings. Some of them use their pension savings or use their unemployment insurance savings, but use their savings. So they want essentially the private sector to be running deficits. And they want the public sector to be running deficits. Now, there is a simple accounting identity that says that the sum of the private sector deficit and the public sector deficit is the current account deficit of the balance of payments. If you've taken macro, this is kind of obvious to you. If you haven't taken macro, let me tell you that this is as stupid as just accounting identities, because the current account deficit is nothing other than how much your country is spending more than it's making. And the private sector deficit is how much is the private sector spending more than it's making, and the public sector deficit is how much is the public sector spending more than they're making. So the sum of the two is how much is everybody spending more than they're making in the country. That's equal to your current account deficit. Okay, so and how do you finance the current account deficit? Well, you finance the current account deficit by either borrowing or using your assets. So you either issue liabilities, you issue debt, you contract loans, or you run down your assets, your foreign assets. Okay. Now countries are in a very, very different position regarding their capacity to borrow, so their credit worthiness, and their capacity to liquidate foreign assets. So we have in our group, you know, countries from Saudi Arabia or Peru that are, you know, very credit worthy with a lot of foreign assets, and countries say like Ethiopia, where you know their fiscal position and their credit worthiness position before this crisis hit was already compromised. So, but the majority of them, given the magnitude of the crisis, will require financial assistance. For example, a country that is relatively solid from a credit worthiness point of view, like Colombia, just got, you know, I forget if it was 11 or $14 billion loan from the IMF. So, so many countries are going to need that assistance. So how do you create policy space? Well, you can borrow all you can. So essentially you plan to run a large deficit, so you need the money, so you need to borrow it. And you need to borrow it both at home and abroad. How much you can borrow will depend country by country. And ideally, you should borrow with the support of the central bank. That's what's happening in the US, that you have the US Treasury issuing bonds as if they were going out of fashion. And the Federal Reserve buying those bonds as if they were going out of fashion. So that's what they call accommodative monetary policy. The other thing that countries can do is they can use their foreign assets, as I said before. How much? Well, depends on how many foreign assets you have and who owns them. You can restructure the budget to cut your non-priority expenditures to make space for the things that you need to prioritize now. And among those cuts, I would mention public sector wages, because, you know, the private sector is suffering a lot because firms are, you know, firing people or not paying them because they're staying at home or whatever. And then the public sector has a full wage bill. And many of the countries we work on, the public sector, controlling for everything we can control, age, education, experience, whatever, occupation, tends to pay higher wages than the private sector, except for the people at the very top. So in one of the countries that we're working on, this distortion is huge. So, if people are already not going to work as intensely as before, it may be a good moment to think about at least a temporary cut in public sector wages. Uruguay did it. They did it to fund an emergency fund of solidarity, and I think they did it, and it generated them political capital. Obviously, maybe public sector unions might not be happy, but generally, it shows a government that is willing to sacrifice in order to fund the assistance. One of my pet ideas that I still have to get a customer to buy into it is the idea of exploiting the fact that the price of oil has collapsed, has gone from 60 something dollars to $30. The price of oil, that part of that decline should be appropriated by the government so that they can reutilize the money for things that are now a priority. And if you think that this decline in oil prices is not going to be sustained, maybe prices go back to 52, then essentially you set prices equivalent to I say 52 because that's where the futures are today, But if that's where the oil is going to go in 5 years, then maybe you give them, the benefit of this long-term decline in the price of oil, but not the distance from 52 to 30. That distance you pocket for the government, and you use it for the emergency. And use your financial system and your central bank to the hilt. That depends very much on your exchange rate regime. Obviously, some countries in our group are dollarized, so they don't have really a money printing central bank. Others are, inflation targeting with a lot of credibility and respectability. They have a lot of room to use monetary independence, monetary autonomy to help their adjust the economy. And this is a time when monetary flexibility, flexible exchange rates, and so on are particularly valuable. So, for example, South Africa, which is one of the countries in our network, went from having the rand at $13 to having the rand at $19 in about a month. So that's a major adjustment of the exchange rate, which helps adjust the economy. So exporters are more incentivized, import substitution is more incentivized, and so on. Which is part of the adjustment that normally you want to achieve. Then there's issues of the international creation of policy space, because obviously if countries want to borrow abroad and they're not terribly creditworthy, how are they going to get their funding? So one possibility is international official lending. Now, all the international institutions want to be useful and they want to feel important and useful, but the truth of the matter is that the money is at the IMF. For whatever reasons, the IMF has $1 trillion that they can deploy. And the Inter-American Development Bank announced that after fidgeting with all their degrees of flexibility, they might be able to put on the table an extra $3 billion. So the distance between $3 billion and $1 trillion, you can realize it's a few orders of magnitude. Okay, so with the World Bank, I think had announced something like $14 billion. The difference between $14 billion and $1 trillion is a factor of 70. So this is a reflection of the fact that before this crisis, there was no agreement by the shareholders, especially the rich countries, to make these institutions bigger, significantly bigger. And they've allowed these institutions to become smaller and smaller as a share of global GDP or as a share of the GDP of the borrowing member countries. But the point is that right now we're in a hurry. The money is at the IMF, and we need to organize the products and the mechanisms to be able to access that money. Many countries are also right now burdened by debt service that they probably wish they didn't have to do. So there's a proposal out there to do a debt standstill, so that countries, certain countries and certain debts, they would not have to pay during the emergency. I think that we'll end up also for many countries with debt restructurings, because they will need to borrow from official sources, but the new lenders are going to say, hey, if I lend you this money, you'll be so over indebted that you won't be able to pay anybody. So if you want my money, you have to tell your previous creditors that they have to take a haircut, or that they have to restructure their obligations, because if they don't, you won't be able to pay me, and I cannot give you the money away for free. So typically when a company gets into trouble, the people who put fresh money require the people who put the old money to take a haircut. And I think we're going to see more of that in the future, especially for the weaker countries. We need more international liquidity, more central, more liquidity lines from central banks. The Fed announced a swap arrangement with a small set of central banks. We need to expand that number, and we need probably to find not only Fed-related lines. Maybe we should talk to other central banks in the world. There's a proposal that I like very much, which is the creation of SDRs, special drawing rights, which is sort of like the creation of free money. It's a Mickey Mouse money to some extent, but once you create it, it's there and countries can use it. So it's sort of like a monetary emission at the global scale. It was done in 2008, 2009, in the last global financial crisis. This one is a much bigger crisis than that one, a much faster crisis than the previous one. So I think it has a lot of merit. There is, today they published, I think it was today or yesterday, a paper where the first author is Gordon Brown. It was signed by many people, including myself, with a set of ideas on what the international community should be doing in this space. Now, then the question is, how do you use that policy space? So now that we've sort of like solved the problem of getting money, how do you use that money? Well, obviously, you want to expand healthcare provision. You want to expand testing and monitoring. My line is to say, these institutions are not going to be able to spend all the money you give them for operational reasons, because they don't have the doctors, because the procurement is slowed down, because everybody's trying to do the same thing, et cetera, et cetera. But let lack of budget not be the reason why they don't do more, okay? Let it be because they can't mobilize the real resources, but they should have a carte blanche from a budgetary point of view. Then you want to support people, and that's highly context specific, because it depends on what are the institutions that exist in the country that you can leverage to support people. Are there unemployment compensation? Is there conditional cash transfers? What are the targeting schemes you have, etc. Social security contributions, unemployment insurance. Some countries are tapping into the money that people have in their pension funds, etc., etc. Support firms. That's also highly context specific. How deep is your banking system? Will your banking system lend money to those firms in a period in which the economy is doing so poorly and companies are doing so poorly and they're so disrupted by lockdowns and so on? So everybody thinks that banks are only going to give those loans if they have some kind of guarantees. And the guarantees will eventually have to be government guarantees. So that's in some sense of use of your policy space. And I would emphasize that it's not that I put them in this order because for alphabetical reasons or other reasons. I put them in that order because I think that's more or less the order of priority that you want to think about. No, that you first cure people, you treat the disease, you then help people, help the firms that employ those people, help the banks that are going to help the firms that employ those people, and so on. So this is a paper that was put out by some good friends and former co-authors of mine, Antonio Spilimbergo, Paulo Mauro, Jeromin Zettelmeier at the IMF, in terms of how to help households with both liquidity and solvency. I'll let you speed read because I don't want to take more time. But there are different things countries are doing to try to help these businesses. This is an assessment of what countries have done. The most popular intervention is social assistance, followed by social insurance, and last supply side labor interventions to try to get people to stay in jobs. Within social assistance, 54 new cash transfer schemes in 36 countries. And in terms of social insurance, paid sick leave is the most frequently adopted. So if people, to consider the lockdown as paid leave, followed by social security contribution waiver so that you don't have to pay your social security contribution taxes and so on, and larger unemployment benefits. This is something we did for one of the countries we're working on, to ask ourselves how much will any of these interventions cost them per month, so that they have a sense of how much money that is. Do they have the space for it? Can they afford it? And so on. So my conclusions is that this is not going to be a short war. Okay. Maybe a couple of weeks ago, I thought that, after 3 months or so, we should focus on recovery. I don't think that 3 months is a relevant date. Countries have the choice of extending the emergency until the vaccine, or just slow down the disease until everybody gets sick, hoping that not everybody gets sick at the same time. But in all the scenarios where you assume that everybody gets sick, I mean, the death toll is huge, and I don't know if we can do better. So I'm now, I don't know that it's feasible. We don't know anything about the vaccine, but I think that even in uncertainty, you have to ask yourself, should we develop a strategy that has a chance to wait for the vaccine? What does that scenario look like? Countries will need more policy space than is feasible under current policies and practices. For example, in many countries, they have fiscal responsibility laws that say that, the deficit cannot be more than X and the debt cannot be more than Y, etc. In this crisis, all of those limits will have to go through the window. There are limits of what the central bank can and cannot do. All of those are also have to come under revision. And we need international coordination to expand options. In some sense, the Gordon Brown letter is necessary because there's been very little international leadership. And there's been very little international leadership because the US has been missing in action. And one of the few comments about international aspects of this war was a comment, I think, yesterday by President Trump saying, or the day before, saying that he's considering cutting contributions to the World Health Organization. So we are running short of ideas on how to protect and then how to recover the economy. This is a super active area of research. And I think that, I've really enjoyed being in a community of researchers from all over the world that are sharing their ideas at top speed. And we're learning so much from from them. We're learning so much from the countries that are thinking through these issues in real time. You know, this lockdown period is, I think, the period, I think it's the period in my life that I've worked the hardest, probably excepting the time I was in government. But when I was in government, I was wasting a lot of time in committee meetings. But here, you know, we've been working really, really, really hard. My team of the Growth Lab has been working really, really hard. We have country teams and a central capacity to do these epidemiological things that our academic research group has been able to put together, and our applied research group has been deeply in conversations with many countries. And to me, it's been really somewhat of an honor and a privilege to be put in this position at this point in my life. Anyway, thank you very much.